Before 2017, India paid multiple indirect taxes for transactions like purchasing, selling, manufacturing, retailing, and marketing. The introduction of the Goods and Service Tax, GST, in 2017 reduced the burden of paying different taxes and introduced a uniform regime. GST has pushed the Indian economy closer to a common market, allowing free movement of capital and services. This article discusses the impact of GST on the Indian economy and suggests revisions and amendments. The Indian GST, Goods and Services Tax, was introduced to eliminate confusion about indirect taxes, increase taxpayer numbers, and promote a corruption-free nation. The GDP growth rate was 8.95%, a 15.54% increase from 2019, 2018, and 2017, respectively. Key reasons for this growth include the removal of multiple tax rates on a single transaction, simplified tax implementation, reduced transaction costs, and a unified tax payment system. This led to increased manufacturing, net exports, and employment, as well as a trade surplus. The introduction of GST also made foreign exchange rates more favorable, contributing to economic growth and reducing tax evasion rates. The overall impact of GST on the Indian economy is significant, with both pros and cons to consider. Positive impact of GST on the Indian economy. It is significant to know that GST is levied at the stage of supply of goods and services across India. Thus, GST is levied on the taxpayer when the goods or services are consumed. There are three types of GST. 1. CGST, Central Goods and Services Tax, which is collected by the central government on the interstate sale of goods and services. 2. SGST, State Goods and Services Tax, which is collected by the state government on intrastate sales. 3. IGST, Integrated Goods and Services Tax, is collected and shared by both central and state governments when the supply of goods and services is supplied from one state to another. It also applies to imports and exports. The positive impacts of GST on the Indian economy have been listed hereunder. 1. Simplified tax structure. Single tax and easier calculations of the same have made GST provide India with a simple tax structure. The buyer, upon paying for the product purchased, gets a clear idea as to what amount of tax he has paid. 2. Support for small and medium enterprises. It is to be noted that the GST amount to be paid depends on the annual turnover and size of the firm. This has been a reward for small and medium enterprises. 3. More funds for production. GST has been successful in reducing the total taxable income, thereby adding to more funds for production. 4. Enhanced operations throughout India. There has been a boost in operation throughout India because of the single unified tax system, making it easier for goods transportation across India. 5. Increased volume of export. Reduction in customs duty on goods have facilitated a rise in the volume of export. Production units have also been saving money while producing goods following the introduction of GST. Negative impact of GST on the Indian economy. GST has negative impacts on the Indian economy, including increasing the selling price for middle and lower middle class people, hindering effective management of working capital requirements by firms, and increasing unemployment rates from 3.39% to 6.06% between July 2017 and February 2018. This is due to the ease of business building and the rise in self-employment for those able to afford it. Impact of GST on Consumer Price Index, CPI. The Consumer Price Index, CPI, measures changes in the price of goods and services bought by households. The Indian government introduced GST, expecting a 3.24% CPI increase in purchasing power. However, the CPI increased to 4.61%, indicating a 1.37% increase. GST generated significant income for the government, affecting consumer purchasing power and increasing inflation rates. The benefits of GST extend beyond the concept, as it has proven effective in other ways. Impact of GST on the common man's pocket. The introduction of GST in India's taxation system has led to increased taxes for consumers, but it also has long-term benefits. Lower taxes for consumer goods producers like FMCG and automotive lead to lower commodity prices, increased demand, and increased production, boosting economic growth. GST also curbs black money and corruption, ensuring the common man's money in India. Should GST rates be revised? The Indian government has the authority to revise GST rates based on people's conveyance, considering daily essentials like processed food, almonds, vegetables, nuts, fruits, ghee, and butter. Luxuries and tobacco can be taxed differently. New GST rates are categorized into 5%, 12%, 18%, and 28%. Consumers pay more taxes on goods and services, potentially increasing government revenue and fiscal deficit. Increased taxation and FDI are expected to boost exports and foreign direct investment. Conclusion: GST positively impacts the Indian economy by promoting transparency and facilitating business ease, while also creating losses in certain sectors due to increased commodity prices.